Are you tired of losing hundreds, thousands, or even hundreds of thousands of dollars in the stock market day trading? This video will give you a solution to prevent that from happening. Welcome to the Rocket Day Trading channel, where you get an edge that no other trader has. Is it time for you to stop losing money in day trading? This channel is devoted to giving you an edge that no other trader has. And we're going to do that by going over 3 secrets that institutional traders don't want you to know and that are preventing you from making money and instead causing you to lose money in the stock market. And if you're not already part of our free Discord, we did call it RENT today, which is one of the few stocks to actually go up. It's up 886 points on the day. The SPY is down 75 points. So even a weak market, we're calling out the best winners on our free Discord. Link in the description. Love to see you there. And if you enjoy videos where we have a full breakdown that will help you become a successful and profitable trader, then you definitely want to subscribe and turn on your notification bell. Thank you so much for supporting the channel and allowing videos like this to be seen by more traders. If you want to stop losing money in day trading, then you need to learn about the law of diminishing returns. Okay. The law of diminishing returns states that the less money you have, the less money you make. This is actually an economic principle, and there are a few ways to read it. But in day trading, it works like this. If your account is in a drawdown, meaning that you lose money, then you are more likely to lose more money and less likely to make money. That means that it's harder to build up an account that's 1,000 than it is to build up an account that's 5,000. So you want to avoid your account losing money as much as possible. I mean, why do we care so much about losing money? It's because of the law of diminishing returns. The more money that we lose, the harder it is to make money. It's a domino effect. And what I want to do is actually walk you through a real life example, okay? Because when I was starting out trading, okay, I've been trading for 10 years. And when I first started out, I had about $10,000, okay? With that $10,000, my goal, like many new traders, was to make $100 a day. Now, $100 a day on an account that is $10,000 is a 1% return daily. Okay. So I only need to make 1% return on my money. The problem was, and you guys let me know if I'm the only one where this has happened to, but I heard some guys talk on YouTube about this hottest new stock that was all the rage, and it ended up dumping 50%, and I lost half of my trading account. So I went from $10,000 to $5,000. And what I found was, even though I would still kind of average that 1% return on certain days, I wasn't a great trader back then, just to let you know. I was only getting back $50. So it was much harder for me to get my $100 return when I was trading with the $5,000 in trading capital than with the $10,000. And this is because of the law of diminishing returns. If your account loses 50% of value, then it actually takes, okay, if it loses 50% of value, it takes a 100% return to break even. So if you are trading with $10,000, okay, you can lose minus 50%. You can lose half of your trading account. But now that you have $5,000, a 50% increase will not get you back to your 10,000. So if you then got a 50% increase, instead of getting back to 10,000, you would only have $7,500. How sad is that? This is the law of diminishing returns in action. The less money that you have to trade with, the harder it's going to be for you to make money. So we definitely don't want to lose money. It's just terrible. If we lose money, it can put us in a really sticky situation, because we have to get better and better trades and better returns in order to get our money back. Are big wins the problem? I think this is a really important distinction. Are big wins the problem? Is this you trying to get the big win? And is the big bear coming to get you? I think that's the biggest question we have here. Are big wins the problem? Some believe that chasing monster wins is what leads to catastrophic losses. But is that really the case? Big wins can be a problem if they are so unreasonable. Okay. Big wins can be a problem if they are so unreasonable that they don't coincide with reality. If somebody bought Tesla, let's say they bought Tesla at $300 and they wanted it to go to $1,000, well, Tesla did go to $400. So there was a nice, big, juicy win for them at $400. Okay. Tesla could have been a good trade because Tesla went, okay, this is Tesla. Tesla went from $300 to $400. So that could have been a good trade. Somebody could have sold Tesla at $400 and made a 33% profit, which is amazing. That's a great trade. However, what happened was Tesla did not stay at 400. Instead, Tesla sunk to where it is now, which is under $200. So now their winning trade from 300 because they tried to get $1,000 for it. Okay. They ended up instead losing money because the stock went down even further. And tell me if this doesn't sound familiar with COSM stock. For those of you who've been watching my channel and who've been following COSM, anyone that wanted COSM to go to $1, they're in a huge drawdown right now because maybe they bought it 50 cents, maybe they bought it 60 cents, maybe they bought it 80 cents. I'm sad to say that I know some people that have bought at 80 cents. And right now, COSM is now at about 37 cents, which means that these people are on less. They have lost more than 50% of their money because they were chasing that big win at $1. And that can be a problem. This can be a problem if it's gone about the wrong way. So what do the professionals say? So the people who are multimillionaire stock traders, what advice do they have to give us? Time and time again, the really big losses in trading come from those who argue with the market and try to prove they are correct and the market is wrong, either by trading against its direction or not yielding to its feedback. Mark Minervini, multimillionaire stock trader, has some advice for us. Really big losses in trading come from arguing with the market, from not reading the charts. So Mark, he believes that by following what's on the chart, by following what the market actually has to tell us, okay, using technical analysis, we can get amazing wins in the stock market. So if you agree with Mark, go ahead and let me know in the comment sections down below. If you disagree, I want to hear it as well. But I do believe that Mark does have a lot of experience in the market that a lot of newer traders don't have. So this idea that big losses come from those who argue with the market may be something that you want to keep in mind next time you're in a trade and the trade's not going your way. And maybe that can help you get a better return, which is the goal of this channel. Solution. Okay, so what do we do if it's so easy to lose money in the market, and if losing money in the market is so catastrophic? How do we solve this problem? Well, one way to limit losses and account drawdown is to use stop loss orders. So the stop loss order is an order placed at the exchange to cut off losing trades at a specific price point. For open long positions, a sell stop order is placed beneath price action, and forget about the rest of that because let's just focus on buying for now. So when you buy, you then generally put your stop loss below a certain level. Now, a stop loss, if you put it in the right spot, okay, and this is very important, we definitely want to come out. We're going to drop a video on how to place stop losses properly. But if you place a stop loss at the correct level, they can help you to avoid catastrophic losses. Because let's say you take a trade and it goes against you 10%. The stop loss can limit the loss right there so that you don't lose 50% of your money. Instead of your account going from 10,000 to 5,000, if you're trading with 10,000, of course, then your account would go from 10,000 to 9,000. Then maybe on the next trade, you can get back the 10%, and then you would be able to get back, let's say it's a 10% return, $900 instead of having to deal with, if the account went down to 5,000, only getting back $500. So by protecting your capital, which is the number one goal, is to protect your capital. If you can protect your capital, then you can make consistent money in trading. The losses are more important than the gains, actually. And that is how I want to really end this and drive this point home. It's not how much you make, it's how much you lose. Are you losing a lot of money in the stock market? Because if you are, then you're likely in need of some training and mentorship. And there are a lot of good mentors, but really, if you want the best mentorship, I highly recommend joining our free Discord, where we go over winning trades that have gone up 25, 50, 100% in this week alone. And last week was pretty much the same. And we expect every week in the future to have some nice wins as well. So if you're not already part of the Discord group, please make sure to join it. But even if you don't, please limit your losses, because it's not how much you make, it's how much you lose. If you can keep your losses small, then you 100% will be able to make money in trading, because if your losses are small, then generally your wins are going to be pretty big, or at least larger than your losses. And because trading is essentially a pool of wins and losses, then you, by keeping your losses small, will essentially grow your account almost as a consequence, as a side effect. So do keep your losses small. And if you want to receive next level mentorship, then make sure to join our free Discord so you can get some awesome stock callouts. If you also want to receive videos like this in the future, make sure to subscribe to the channel and turn the notification bell on so you never miss important videos that come out that will notify you of short squeezes and how to trade them. My name is John Cota, your trading coach, here to help you succeed in the markets. Thank you for joining and watching this video, and have an amazing day. See you in the next video.